Well, Nerina, we have the futures closeout this afternoon. What sort of action are you expecting over there?
It's quite a busy day on the market because of futures closeout. We're currently standing at around 70,000 contracts on the top 40 futures still outstanding, and we've certainly seen a strong push in our market, contrary maybe to some movement in the international markets, and certainly our market buoyed by the movement for demand for underlying stock because of the futures closeout. Of those 70,000 contracts outstanding, we expect the majority of those to be allowed to expire. Not a lot of those to be rolled, probably not much more than about 10,000 of those to be rolled. The futures closeout priced over a period of 100 minutes. It started at 12 o'clock and it will therefore conclude at 20 to 2. And we do expect that subsequent to futures closeout at 20 to 2 that we might experience a little bit of weakness in our market. If we look at US futures at this stage, a little bit negative, so we might see some weakness in our market following the strong futures closeout that we are experiencing at the moment.
Well, following on from the futures closeout, we have the index rebalancing tomorrow. And of course, we did get some news earlier this week on just what some of the new constituents would be in the various JSE indices. One of the biggies, of course, on the Aussie 40, we had Telkom moving out, Mondi moving back in, and really a feature of Telkom being a lot smaller since it unbundled Vodacom.
Yes, after the unbundling of Vodacom, Telkom still managed to maintain its top 40 position, but due to recent share price weakness, its market cap has declined to such a level that it became an automatic exclusion from the top 40 based indices in this quarterly review. There's a buffer zone for the top 40 indices between position 35 and 45, and existing top 40 constituents need to fall to below the rank of 45 to be automatically excluded. This was the case with Telkom in position number 47, and as such it will be excluded from the top 40 based indices, so not only the all share top 40 but also the cap top 40, the Swix top 40, the Sharia top 40, etc. So Telkom to be excluded as of the close of business tomorrow, and Mondi, both lines of equity, Mondi Limited as well as Mondi PLC, to be included from the start of business on Tuesday morning.
Well, looking outside of the Aussie 40, and obviously that's where a lot of the tension is, any notable changes on any of the other big indices?
Yeah, it's an interesting feature for me when I look beyond the top 40 at some of the other derivative-based indices, in particular the Indy 25 and the FINDI, the Financial and Industrial 30 Index. In both those cases, we have two retail stocks coming into those indices. In the case of the Indy 25, we have Woolworths coming into the index, replacing Murray & Roberts, and in the FINDI 30, we have Truworths also replacing Telkom. So Telkom, another loser in terms of the Financial and Industrial 30 stock. For me, it's interesting because I think it confirms the recent strength that we've seen in the retail, both on the listed side of things as well as in the retail shares. Of course, we saw our retail sales figures coming out yesterday, and although still a contraction, quite a bit better than the market previously expected, and clearly indicating that the retail picture is starting to change in South Africa.
Of course, some of our viewers might be small cap investors. How about looking at some of the smaller indices, and particularly on the Alt-X? Are we seeing any changes there?
Yes, there's some interesting moves also afoot there. There was quite a bit of confusion around specifically the Alt-X 15 index. When the JSE announced the changes to these indices after their quarterly review meeting late last week, it indicated that there would be a lot of changes to the Alt-X 15 index. Now, when the index for this alternative exchange was first introduced, it was not considered, they didn't require liquidity screening for these stocks in order to be included in the Alt-X indices. But subsequent to the overall Alt-X index, they also introduced the Alt-X 15, being the top 15 stocks on the Alt-X index. And for this one, they said they do require liquidity screening. And at the December quarterly review, as a result of this liquidity screen that they introduced, 8 of the 15 constituents at the time did not pass the liquidity screen, and as a result were replaced with other stocks. When they first announced the index review results last week, we found that 6 of those 8 stocks then was announced to come back into the index. It was found that this was erroneous, and the JSE earlier this week had to issue a restatement on the constituent changes for the Alt-X 15, and there's now only 2 changes that will take place in the Alt-X 15. So still some movement there, but certainly not nearly as much as was first anticipated.
Well, Nerina, despite the bit of pullback we're seeing globally today on the markets, of course, we have the Dow futures trading negative at this stage. I mean, it really looks like risk appetite is on the increase again in these markets, and the general direction is up at the moment.
Very much so, Stephen. Across the globe, we are experiencing multi-month highs. Most of our markets are seeing highs last seen in the third quarter of 2008, prior to the big decline in October 2008. So on the all-share index, for example, we have breached the levels that we had in January this year, and we're back to the levels that we last saw in August 2008. So certainly a very strong movement in markets across the globe. I do believe that we've got Ben Bernanke to thank for a lot of this. His speech earlier this week, in which he confirmed once again that interest rates in the US will remain at these exceptionally low levels for the foreseeable future, certainly buoyed markets and increased risk appetite, not only in developed equity markets, but specifically also in emerging equity markets. And to that effect, certainly on the financial side, our banking stocks yesterday took very strong heart from that, coupled with a report out by JP Morgan where they were quite bullish on emerging market credit and emerging market banks in particular. And yesterday we saw the likes of Standard Bank and Nedbank performing very strongly, and today we're finding that First Rand and RMB is playing a bit of catch up, and we still continue to see some very good performance out of our financial and bank stocks in particular.